Catering to the last point, classification, does it match the economy? So now recently, REITs have been classified as an equity by SEBI. So now the question is this classification even true to its label? We just discussed it earlier. Yes, it does reflect the returns and it follows the same pattern as that of equity. So it does justify the labeling now. So now the broader question, itna sab seekh liya. Now how do we integrate this into portfolio construction? Now, I wanted to keep it very simple, which is why I wanted to show all the facts. So if you look at that since July 2021 CAGR for REITs and that for equity, debt and gold. I have kept all the four asset classes here. I wanted to show that if you just look at the CAGR returns, the CAGR returns since inception for this, it's not very significant. It's higher than that for Nifty 50 TRI. But there's one disclaimer I would like to give here that there's the period for which we are considering this, like this asset class has been very nascent, like we mentioned. REITs and InvITs have been operational, and the index has been there since July 21 only. So the period here that we are considering is very small, and it could have that risk. In this period में अगर कोई और asset ने perform नहीं किया तो the risk definitely exists here. But just for the sake of it, if you consider it from the inception से अगर आप consider करो तो आपको दिखेगा कि आपकी निफ्टी रीट्स इनविट्स आपके निफ्टी 50 टीआरआई से काफी ज्यादा रिटर्न दे रहे हैं. But at the same time, just look at that red number, that standard deviation. That is basically a proxy for risk. आपने रिस्क भी उतना ही ज्यादा लिया है. आपने इक्विटी से ज्यादा रिस्क लिया है रीट्स एंड इन्वेस्ट में फॉर दैट पीरियड टू गेट दैट एक्स्ट्रा रिटर्न. So when you evaluate this asset class, I would like you to just divide that your CAGR with your standard deviation. You will get your return per unit of risk sort of a metric. And उस केस में ना आपको debt सबसे better asset class दिखेगा. If you just look there, you will see that Indian debt has delivered 6.12 का return in that same period with just 2.38 का standard deviation. So if you just look at it from this perspective, I would suggest that like it just looks like you don't need to have this as a separate asset in your portfolio. If you a better way to play or to add this into your portfolio could be by having a very nominal share in your portfolio, which enhances your existing equity returns, diversifies your existing equity bucket, but it cannot act as a hedge against inflation, and it may not give you the protection in the downside risk because the standard deviation is fairly higher. Standard deviation के terms में और protection के terms में, stability के terms में, debt turns out to be a much better product here.
So just again, like disclaimer, this is recent data, only 4 years, 5 years of data. Ideally, what based on the globally what we have seen historically is that typically the returns will range from somewhere between debt and equity. That should be the ideal scenario, and the volatility also should be somewhere between debt and equity. But like Sneha mentioned, there are very few REITs which are listed, and that too for a very limited period of time. So I'm sensing that there's yet to be a lot of things to be learned and a lot of things have to be discounted.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.